Good afternoon. Welcome to the FCCJ. I'm moderator Andy Sharp from Bloomberg. We have our two distinguished guests here today. This press conference was advertised as, a press conference looking at the impact of China on Japan and Abenomics. I think we're going to try and broaden this out slightly as well, given that Prime Minister Abe last week unveiled his phase 2. That was good timing. His phase 2 of his Abenomics program. So, we're going to basically try and split the press conference between, discussing China's impact on Japan, but probably maybe 2/3 would be more focused on what is actually going on here right now. Just to recap, Abe last Thursday at a press conference at the LDP, he announced a set of 3 brand new arrows of Abenomics. He had the first 3 of the easing, the fiscal stimulus, and the deregulation, the growth strategy. Suddenly, these new arrows appear. A strong economy, childcare support, social security. And he didn't go into details on Thursday or another press conference Friday about how he planned to achieve these goals. So we're all kind of scratching our heads at the moment a little bit to understand what Mr. Abe is trying to do. Maybe our guests here today can shed some light on this. Who I'll introduce now. Mr. Hiromichi Shirakawa is Chief Economist at Credit Suisse Securities in Japan. So he's going to talk today mainly about the market side of, he's a market economist, the market side of Abenomics and the impact from China. Whereas our next guest, Mr. Kosuke Motani, he's a Chief Senior Economist at the Japan Research Institute. He's going to speak a little more broadly, especially looking at the demographics of this situation. So the two guests are going to speak for 15 minutes or so first, and then we'll open the floor to some Q&A. So one round of applause, please, for our guests. And if Shirakawa-san, you could start, please.
Okay, good afternoon, and thank you for inviting me again to this distinguished the occasion to talk about the Japanese economics again. I actually asked the Secretariat to distribute my one-page note. I'm a macroeconomist and working in the investment bank. So a bit of the top-down macro and the market situation as well. Firstly, the Japan's, the economic situation. I'm gonna start with the labor market situation. We still think that Japan's labor market is not so efficient, not so liquid, and still some underutilization of labor, and very low wage growth. And if you take a look at job offer and seeker data, I think we continue to see a increasing mismatch of demand for labor and supply of labor. And because of the remaining illiquidity of labor, we have seen a increasing excess demand for labor in the services industry. But this is again a reflection of the structural problem of the labor markets, and we do not think labor market is now under a full employment situation. We have a bit different view from the Bank of Japan. And also, if you take a look at the Japan's U6 is right now very popular, the index for the labor markets because of the Fed. The U.S. U6 is right now 10.3%. U6 does cover the official unemployed plus so-called marginally attached labor force, which is not in the labor force, but still looking for a job and did some search within the past 12 months, and plus part-timers for economic reasons. We estimate Japan's U6 at 6.2%. So the official U3 is a very official unemployment rate. Right now, low 3%, but U6 is higher. Of course, the calculation of U6 is somewhat difficult because it is totally up to your assumption. But also the labor force participation is also very, very important for those numbers. We can easily have the 10% U6 if we include the all persons who currently want a job, but not in the labor force. So I actually put only the guys who looked for a job over the past 12 months, 6.2%. But if we include all the people not in the labor force but want to get a job, U6 can be 10% in Japan. So this is the situation. Plus the wage growth, even though continuous pressure from the government, I think the wage growth is right now in terms of the scheduled earnings, so-called the base pay, only 0.3 or 4% for the latest figure. The second point I'd like to make is that income distribution or savings distribution, I think more and more skewed. So labor share of income has come down to, in our calculation, of course several different definitions can be there. In our calculation, it's go down to right now the 62%, something like that, and lowest level since 1987. So continuous, I think, the reduction of the labor cost by companies. And right now, the non-financial corporate sector savings to GDP, in our estimate, around 7%. So the significant, I think, the savings, at the, in the corporate sector. But in the meantime, companies are not investing money. So if you take a look at corporate investment to cash flow, in our estimate, only 52%. This is a historical low. So not picking up at all under Abenomics. Third point is the external balance or fiscal sustainability is very important for the interest rate market dynamics. As I pointed out, the Japan's labor market remains or continue to suffer some structural problems. Wage growth is low, and income distribution is more and more skewed to corporate sector. But a good thing or one achievement in my understanding under Abenomics is the external balance has improved. And if you take a look at current account surplus to GDP, significant improvement from -1% to around mid 3% last quarter. Of course, the global commodity prices have come down. Oil prices and other commodity prices have come down. But we tend to think that the VAT hike last year and remaining very strong appetite for savings by companies have been the main drivers. So Abe administration has failed in stimulating companies to use money, and also they did some fiscal tightening. But this is the achievement for the fiscal sector. So if you take a look at Japanese interest rates, still 0.3, 0.4% for 10-year. So I don't know, this is the achievement for everybody, but I think at least for the Ministry of Finance, big achievement. This is the third point. The fourth point is the monetary policy. I would say there is a dark side of QQE. It's a bit controversial. Some economists want to argue QQE of Bank of Japan is working, or still some argue that BOJ monetary deflation is really a good policy to do. But in reality, QQE does not look to have worked. QQE's main, of course, the effect was the yen's devaluation or depreciation. And yen devaluation actually deteriorated terms of trade because I think the more import price increases, other things being equal. And the one hope before the Abenomics started was if the yen depreciates, real trade balance improves meaningfully, but it didn't happen. So terms of trade deteriorated, real trade balance did not improve much, and that's why industrial production remains very sluggish. So this QQE has not been successful in, I think, the pushing up the level of production. Of course, one thing is the inbound tourism. You like inbound tourism, I think. And yen's depreciation has actually stimulated inbound tourism somewhat, but inbound tourism is not necessarily that stimulative to the economy, mainly because multiplier effect or multiplier is less than 1. If the Chinese people come here to spend money, some of the expenditure here in Japan will be leaked as imports. And also the impact on the employment, in our estimate, still not so big. Of course, some impacts on tourism industry, but not necessarily that is really overwhelming. So the monetary easing has not worked well, and the dark side, of course, is the higher import prices. So people are now suffering the high food prices, and because of that, and along with the VAT hike, the consumption has been weakening. Of course, the Motani-san is an expert on the demographics, so he may have something to say on the consumption weakness. But I think from the cyclical viewpoint, one thing, of course, is the higher import prices, higher food prices have weighed on consumption. That's right. So the future of Abenomics. So I would say that for example, easing, monetary easing, no more easing. So I think if you take a look at the current situation of the consumption, is it possible for BOJ to say we have to ease monetary policy more and weaken the currency more because it is maybe harmful on consumption? But one big issue for central bank policy is the credibility of 2% inflation target. So it is up to you, but I think if you do like inflation targeting policy, and if you like the Japan's very inflexible inflation targeting, which is very uncommon, because I think everywhere in the globe, no central bank is targeting 2% in such a rigid manner as Japan. So flexible inflation targeting is the current global standards, but BOJ is still following the very rigid. Rigid means 2% is the must-hit target, and must be hit in the near future. So if they do stop monetary easing, there will be a credibility issue of this 2% inflation targeting, which is the very center core part of the Abenomics, as long as when it started. No more VAT hike. This is a really big thing for the government because if they do hike VAT, they may continue to argue that consumption could be weaker. But again, this is not the VAT hike is the only factor for the weakness of consumption. Of course, consumption weakness or it's the current normal standards of consumption seems to be continuous gradual decline in my understanding, and maybe Moda-san may have the similar view. But I think the point is because of the weakness of consumption, VAT hike story may be somewhat affected for the next one. But if that is the case, fiscal sustainability could be undermined. And remember that the latest downgrade of the one rating agency tended to suggest that they are not expecting the VAT hike happening again. And so in that sense, more spending reform would be needed. So no more easing by the central bank. But I think in the meantime, no more VAT hikes. So what they're going to do in terms of improving fiscal sustainability is a big question. But spending reform would be politically difficult, probably. So the Abe-san's, I would say, very strange press conference on Thursday tends to suggest that this administration has changed its course quite meaningfully. And again, their focus is back to potential GDP growth rate. But how to raise potential GDP? Nor, I think, the hard answers. I still favor labor market measures would be more helpful. But still, I do not have any strong view about how to improve productivity going forward. So in that sense, I think they are changing their focus, but we do not know about the measures and transmissions and so on. And finally, China, Japan. I'm not China expert, so what I can say would be actually not many, but I'd like to say several things apart from what I put in my sheet of paper. I think the point is, have Chinese authorities learned from Japanese experiences? That's very, very important. In my understanding, if the dynamics is similar, China would, in the coming, let's say, 8 to 10 years, experience a credit crunch, substantial downshift in the trend growth rate, substantial increase in non-performing loans, and financial instability. So I think the debt dynamics-wise, I tend to think that current corporate debt situation in China seems quite similar to Japan's 1990 or 1991. So I think and also I tend to think that if China has learned from Japan, they do not go for fiscal stimulus, because the Japanese experience tells you that fiscal stimulus has not worked to reduce the debt burden. So the question is China the thinking more of the monetary stimulus or not? Because I think if they do not go for fiscal stimulus to of course to resolve the problem, one way to do is to inflate the economy to reduce the burden of debt restructuring. So I still think that monetarists are alive globally. So means what we, as a market economist, I'm interested in the China's currency policy, of course, and of course monetary policy. But a point is that the China may start to try to develop the currency much more meaningfully than markets expect. This is mainly because if they do keep the currency strong, there will be more chances for them to, I think, suffer weakening exports and industrial production. Some say China borrows money from outside the country in dollar terms. That should, of course, damage the Chinese, durability or ability to repay their debt in the dollar. However, that external debt to GDP in China is as low as 10%. I do think that that argument is not so robust. I still believe that China has incentive to devalue the currency. Because from the very top-down macro economist viewpoint, Japan's problem in 1990 was the continuous the acceptance of the stronger currency. So, but if China starts to devalue the currency, that means China starts to export deflation globally. So that would affect the Fed policy, and that would affect the exchange rate. So I personally expect the yen to go up to maybe 90 by the end of next year, or even later. Maybe, I don't know, maybe a year and a half time. So my concern as a market economist is the change in the course by Abe-san on Abenomics. And China is now coming in trying to start develop the currency, export deflation. The whole industrial nation central bank policy may change unless Japan go for the very crazy negative interest rate policy, for example. Yen would appreciate quite massively. Stock prices go down, and Abenomics is over. Done. buy. So in that sense, we are now at the very critical moment, and I hope I am wrong. I stop. I stop here. Thank you very much.
Thank you, Shirakawa-san. Okay, Motani-san, お願いします.
Okay. Again, let me also say thank you very much for letting me come to hear this situation at this occasion. I'm a Motani, and I usually don't appear to this place or any other TV programs or so talking about economy because I'm not really an economist. I'm a regional promotion consultant. Has been doing that for 30 years. And, nowadays, because thanks to that, foreign visitors finally flowing into Japan, my job of promoting the regional economy in Japan is becoming more and more internationalized. And that was my big bet that, as you see, I talk broken English, but I talk really fast, and I can discuss in English. So my bet was I'd rather do local things rather than international things, even though I'm a graduate of the Columbia Business School. And my bet proved to be right, I think. And I'm ready to discuss anything afterwards. And I'm sorry, my handout is not there, but I prefer you to watch my figures. Okay, don't read any letters. I'm ready to answer many questions. I don't speak all. I just introduce you some of those. And if you are majored in economy, you misunderstand a lot about what is happening in Japan. I show you one example. This is the long-term change. Okay, I used to be a banker. Still, I use the same ways to now analyze the company, to analyze the national economy, different from macroeconomists. So I respect this long-term change of the absolute number. Okay, this is the yen-dollar exchange rate in last 30 years. So-called yen depreciation under Abenomics is this change from 80 to 106 last year, and this year it's now 120. Okay, so yen depreciation a lot of it after long list of the yen appreciation. Then did it change our export? Which do you think is right? Our export, okay, is export. Japanese export in terms of trillion yen, the left scale, okay? Did our export change in this way? Or did it change in this way? Which do you think is right? I want to ask you, everybody, okay? You're eager, you're accustomed to ask yourself, but I want to ask you which is right. If you think this is right, show 1. If you think this is right, show 2. If you are very timid, don't show anything. Okay, but please answer in wrong manner. Okay, don't say the correct things. Japanese export from the customs, it's very correct. Was it like this or was it like this? Which do you think? 1 or 2? Show your hands. Please.
1.
Please place your hands. Okay, or should I extract it, please? Raise your hand. Okay, you don't know. Okay, I'll show you the truth. You're so accustomed to just listening to the information rather than giving your information. That's why you don't learn so much. Okay, I'm trying to say a joke, but maybe you don't think it's a joke. Okay. Okay, I'll show the truth. Okay, this is the real change of the Japanese export. And you don't know this, then don't write about Japanese economy, anything. This was the figure, wrong figure. I just made it reverse, okay? Mm-hmm. So, very sad thing about Abenomics. Prime Minister Abe believed that this was the right figure for Japan. In reality, okay, under yen appreciation, our export was growing so fast. Even under very high appreciation of yen under Noda cabinet, our export was about 1.5 times more compared to the bubble age. So why did Abenomics not grow the export more? It's very obvious because it was at the maximum. Okay, if you don't know that, but not only this, check the figure before you learn macro theory. because the Japanese figures very often against basic theory. But this is reality. So don't forget about your theory. Okay? Why yen was so highly appreciated? Because we had so huge export power. So this is before Lehman shock, and this is Lehman shock. And 1 year after that, we covered. This is a big earthquake hitting East Japan. No impact on export. This is a true, real story. What do we export? Okay, all small machines, devices, fine materials produced. So many of them are B2B, not B2C. So don't discuss about Samsung, because Samsung is buying huge tons of Japanese materials. That's why Japan is running a huge profit over Korea. Yeah, this is the reality. Okay, Japan is earning money from United States and major industrialized countries in Europe, and also we are earning money from the upcoming Asian countries. Then we are paying all those money back to our Middle East, Russia, Australia, and some other oil-producing countries. So that's the structure of Japanese trade. So if you know this structure, then what you're going to say is that no yen depreciation. If you make the yen depreciated, then we'll have to pay more to those oil-producing countries, while we will not earn many more from those industrialized countries, because we've been earning quite more compared to before. No impact, no positive impact on the export, but very bad impact over import. That's why, yes, our import has been growing so huge, and so now we had a huge trade deficit. But Japan is very lucky, like so-called stupid former prime ministers tell this is country of God, and everybody says, what are you talking about? But maybe some kind of God made the oil price a lot lower than expected, so we are now saved a little bit. But it's just coincidence, not a power, Abe. But anyway, that's the first thing. And then the main topic was here. What happened in the Abenomics, and why? And it's related to actually demographics. So I'm going to show you a demographic impact, and then I will tell you about China. We'll see the same thing in China. Okay, this is the monetary base. So Mr. Shirakawa-san was moderately criticizing about this, but he thinks it's a huge risk. Maybe most of you think the same thing. The monetary base now tripled in less 5 years. It's crazy. What happened to the economy? Okay, here's the market, stock market. So I don't see the Nikkei index, but I use the stock market capitalization of Tokyo Stock Exchange. The total value of stock market, okay? Half of this year, in average, it was about 569 trillion yen. And actually, it was higher compared to the Lehman bubble, or so-called real bubble of Japan economy in around 1990. Okay, so now bubble is bigger. And many people say, well, thanks to the Abenomics, stock market went up. Is it true? Do you see any correlation between monetary base up and downs? Not so many downs, but to our stock market capitalization? No. A Lehman bubble, actually, Prime Minister Abe at that time was, decreasing the monetary base, but stock price was rising. Many years ago, when our first bubble bursted out, our Bank of Japan increased this monetary base, but it did not work. And also, Democrat DPJ was also Mr. Shirakawa-san, not the Shirakawa-san, VOJ was increasing the monetary base while they reigning. Yes, but it didn't work at all. All of a sudden, it worked. And people say, all of a sudden, it's because of the monetary base easing, because of the Kuroda-san and the Abe-san. Is it right? I don't think so. Actually, stock market capitalization is nothing to do with the GDP, nominal GDP. Well, you can say it's increasing a little bit, thanks to Abe. No, it's a nominal. If you see the real, that is not often very real in Japan, it's not increasing. But anyway, if you see nominal, because of the slight inflation caused mainly by yen depreciation, worked a little bit to increase the GDP nominal, but it's lower than its peak. But note that our GDP high peak was 1997. For those of you who were in Japan at that time, not very small number of you, okay, this is the year that our Yamaichi Securities and all those other bunch of the banks were consolidated or bankrupt. I mean, Japanese financial crisis year. That was the peak of our GDP. And at the bubble age, actually, it was a lot less compared to our financial crisis age. And compared to our bubble age, when the stock price was very high, okay, our GDP is still 80 trillion yen more. So I don't find so many people who know this. Like, I don't find so many people who know our export has been growing under DPJ. So if you ask many Japanese economists who don't know this, they don't know this. So although I'm a regional economic promotional consultant, I have to say these things, even though it's not my job. Everybody is like North Korea. They don't look at figure. They just talk about notions or models and maybe religion, their religious confession. The reality, it's flat. Our final consumption expenditure of households, okay, our personal consumption, flat. And I want to say it's not declining, flat. Okay? That's flat. GDP flat, our personal consumption flat, our compensation of the employees and so on. It's not a wage, I mean a multiplied a wage. I don't respect so much about the divided figure. I like the gross figure. Okay, gross wage paid is also flat. So that means stock price and the monetary base easing has nothing to do with those real economy represented by those three major figures. Why is it so flat? Okay, I'll show you the answer. Not answer. My finding, or you can say it's assumption, but it's finding. Okay, it correlates to number of workforce. What do you mean by number of workforce? It's labor for those people who have work. Okay, it's been flat since 1997. Okay, in 1997, 66 million people had job, including part-time job. Now it's 64. It's almost flat. And with this flat number, gross number of the workers, multiplied with the Shirakawa-san's explanation, he explained about our flat wage, not increasing wage. That means flat consumption, a flat GDP. And please get shocked that even though in Japan the stock price goes up, no impact on consumption. That's real bad news. We did it twice, 3 times. Stock price will not have positive impact on consumption. No so-called asset effect. But the good news is that when stock price goes down, there's no negative impact on consumption. Well, you see, there's a slight decrease. No, it's because of the decrease of oil price at that time. Extracting the impact of the oil price, actually, it was not so decline. It's growing. Okay, so number of the workers has a dominant impact on national economy. That's my finding, but it's very easy for me to find that because I'm always analyzing local economy. In many local regions, we have more decrease of the population compared to Tokyo or all over Japan. Then I'll always find the same thing, and decreasing population means decreasing consumption in that area. Very easy thing to tell if you don't learn economics. Okay. And why our number of number of the workers in Japan is decreasing? Because our population is decreasing. In correct words, our working age population has been decreasing, maybe by 10%. Then, even though we have a lot more seniors working now, and also thanks to Abe-san and other people, actually I've been saying the same thing for 10 years, more women's now working. So that's why number of those who have job is not decreasing as fast as our working age population has been decreasing. But still, it's impossible to make it grow. You understand that? In average, 70% of working age population in Japan has really job. And because of the structural change, our basic structure is the same. So, and we're going to foresee more decreasing working age population in the future. That means we'll not expect to have more people work. Then that means our economy will flat. Then one thing to urge, and I want to ask you by answering the question, I want to show you the same thing is happening in China. Okay, Japan and China comparison, and also the United States. It's a working age population was at the top of 10 years, 15 years, 20 years ago. It's now about 10 million lower than the peak, and that has had a very big negative impact on the economy. And if you see China, okay, I want to show you China. Here's China. You can say retrieve the same figure from the United Nations homepage. It's very easy. Okay, they enjoyed real huge growth of working age population in last 15 years. Now they are at their peak this year. They're gonna see the same declining more and more. Then my guess is that China will see the similar situation 20 years after Japan experienced. So the conclusion is just exactly the same, I think, that Shirakawa-san had said. He talked from the financial or cyclical point of view, economic point of view. From my demographic point of view, you expect to see the similar thing in China too. So I don't explain, but just showing this figure, I finished, and I answer your question.
Okay, thank you very much, Motani, and also Shirakawa-san for your speeches there. So there's a lot of things we could talk about here. So it's very broad. We can ask a very broad number of questions. So I'd like to get the working press to ask questions first. And if you could state your name, your affiliation, and keep your questions short, please, with no speeches. So anyone got a question to ask? Anthony.
Anthony Rowley, Singapore Business Times. A question for Shirakawa-san. But first, an observation, if I may. You seem to suggest that China is going to devalue the yuan significantly, but the yen, after the Plaza Accord, was massively appreciated. The yuan has only been moderately appreciated since it's gone from 8 point something to 6 point something, which is roughly 20%. I don't quite understand your reasoning that China needs to or is likely to massively devalue the yuan. And one other point, you mentioned a deterioration of the terms of trade, right, for Japan. On what? On manufactured products or overall? What are you talking about?
Well, yes, I think for China's currency policy, my understanding is that unless China devalues the currency, I think China would continue to lose its relative attractiveness as a center for the global manufacturing industries. Of course, the many other things do matter, like wages, tax, availability of labor, a bit of the environmental related cost to the companies. But if the Chinese currency remains strong, in real effective terms, they're going to continue to lose capital, reduce the chances for capital inflow to increase, or capital inflow continue to decrease, and less investment, less exports. So if China can switch to a more services or consumption-led economy, it will be okay. But I don't think it is really the case for China right now. So I actually do not recommend them to devalue the currency. My point was China may try to devalue the currency to buy time. But as Motani-san chart, suggests that the currency devaluation is not necessarily good for the economy, or even Japan can benefit from the stronger currency, or Japanese exports have been strong. So I think this is what does matter will be real competitiveness of the Chinese products rather than the currency we know. But I think that China may want to follow the suggestions by the monetary economist. So that is a point. On terms of trade, that is very much the prices of exports and the prices of imports, and I think the ratio more or less.
In terms of manufacturing goods,
Yes.
have the terms of trade deteriorate?
Well, the actual terms of trade have not deteriorated over the past year or two, mainly because of the import prices have come down because of the global commodity price declines. But if you exclude the global commodity price impacts, the yen's devaluation deteriorates terms of trade, mainly because on exports, the share of the dollar yen in pricing in prices is roughly speaking 60% or 50%. Sorry, 50%. So 50% of exports are dollar yen, and on imports, dollar yen is like roughly speaking 80%. Means. So the reason why government wants to devalue the currency is the terms of trade would be automatically deteriorating. However, if the weaker currency does help real exports and does discourage real imports, that would work. But as Motani-san correctly argued, I think Japan's real trade balance has not improved much, mainly because real exports could not grow more, and real imports continue to grow because of the more import penetration. So the so in that sense, this policy of devaluing the currency, I think it was wrong in a sense that if the authorities want to improve trade balance, no, it is not happening. Because I think this is a kind of lucky commodity price decline. That's it. That's it. It is not controlled by the central bank, BOJ. So already too late for the government to devalue the currency, maybe. Or I think the point is currency does not matter. So what does matter is, I think, for more import penetration, more import cost increase, more food inflation, and so on. So luckily, gasoline prices did not rise because of the global oil prices decline. If the gasoline prices or the global commodity prices they have increased, disastrous consumption, much weaker. So I think that Abe-san finally found that the yen devaluation doesn't work.
Okay, we'll go to Daniel and then this gentleman here.
Daniel Leusink with the AFP. Thank you very much for both of you for the talk today. My question is for Shirakawa-san. To what extent do you think a slowdown in global growth, especially in China's economy, is weighing on Japan? And also, do you have, this Thursday, the Bank of Japan will release the results of the Tankan survey. What kind of new things do you think the results will tell us about Abenomics? Thank you.
Well, we actually do not believe Chinese offshore GDP statistics, and we did some analysis on which indicator of China are more relevant for Japanese exports and GDP, and we found actually 5 indicators are more relevant. One is the industrial production, and electric power consumption, and also the retail sales, and the capital investment, and the finally real estate business conditions index. So 5 indicators we actually use and try to estimate the Chinese economic activity relevant for Japanese exports. And we found that it's a kind of GDP, but we found that that is growing right now, roughly speaking, at the pace of 4% year by year. And the point is, if the industrial production, which is now growing, roughly speaking, 6 to 7% in China, if it goes down to zero, so if Chinese production stopped growing, Japanese GDP will be affected on the downside by, roughly speaking, 0.5% in our estimate. So it's a kind of the magnitude. It's not so big, but it's not so small. And in that sense, we are looking at if it's minus 0.5, temporarily Japanese economy could suffer negative growth. The secondly, on the BOJ Tankan, I think the Japanese companies are still kind of optimistic, in my understanding, and the business condition DI would not decline much, maybe flat, quarter over quarter. But we focus more on the expected inflation by companies to be out on Friday, not Thursday, because this is the credibility issue of the central bank. But I think if the expected inflation rates go down further, BOJ may be inclined to do more. And if I don't know if you know, but I think the 3-year expected inflation rates by companies right now is 1.6% from the last survey. If this 1.6 goes down to 1.4 or 3, that would matter a lot for the BOJ, I think. So they hope that the companies' expected inflation rates do not go that much. I don't think the BOJ manipulates Tankan, but I was once in charge of Tankan survey at the BOJ, and I know that I think it's not manipulation, but I think it's a bit, some.
Change of nuance.
Okay, yes, please.
My name is Patrick Walte with Frankfurter Allgemeine Zeitung and Neue Zürcher Zeitung. Unfortunately, another question to Shirakawa-san. Actually, these are two questions. First of all, I still don't understand what is your main argument why the devaluation in Japan did not help the devaluation of the yen did not help the Japanese export. I'm still sorry for my problems, but I still don't see your main argument. And the second question would be, we just don't know what Abenomics 2.0 might be, what this new phase of Abenomics might be, because we don't know about any details. But could you please have a short look back? What did Abenomics in the first phase did, and what is missing from your perspective? What should Mr. Abe doing in the next years?
Yeah, on the first question, I think first of all, production outsourcing. So the structural change in the trade structure, a change in the trade structure. So I think the Japanese companies have become more on the capital-intensive sector, like parts and so on, and the more production outsourcing for more labor-intensive industries, even including car industry. So exchange rate devaluation does not affect easily or change the structure of trade. So more outsourced and I think changing so-called supply chain, for example. So it will be very difficult for companies to come back and so-called re-onshoring. So re-onshoring could happen if the currency remains 110, 120 forever. Some companies come back, but I think it is not for guaranteed thing. And also, it will take maybe, let's say, more than 5 years to change the trade structure. So that is the point for the limited impact on exports by currency devaluation. And on the second phase of Abenomics, I don't think, I don't think there is anything really in the pipeline by the government. I don't know, but I think we very much like the labor market reform actually. Even though labor market reform is a bit ambiguous, a big word, I would like to see more people flow, mobility, So labor mobility has been stable, but I think not picking up. So, and again, it's very, I think, the distorted markets in the sense that some industries suffering a huge shortage of labor, but still other industries not necessarily suffer, but have some excess labor. So people flow would be more important, and I tend to think that if the people move, people's flow become more mobilized, positive impact on GDP or potential GDP. And also, I actually do not like the immigration policy much, mainly because we can have more. We have more to do on those labor reform story. But I think Abe-san does not look that interested in labor market reform because this is politically not so probably popular. Because in the hiring issue as well. So from our analysis of the labor markets, excess supply labor, I strongly believe that office workers are in excess. But a point is how many office workers can move to services industry because of the huge wage gap. But still, we may need to try. Our industry, I think still we suffer not shortage, I think the accessible labor. But a point is more education, more I think investment on IT, less people, or smaller demand for labor in the financial and I think the headquarters of the manufacturing industry, banks and so on, probably. But they are much well paid or much better paid. So are they going to move or not? So then you have to go to the immigration kind of story. But I tend to feel that maybe Modani may have the similar view. I won't ask Modani, but I think the point is the total labor force is now declining, or the population is also declining. So consumption is also declining. So is it possible for demand for labor is also declining? So the one possibility is we suffer shortage of labor cyclically, but I think it is a cyclical thing. So in the end, both supply and labor shrinks and get to the new equilibrium. Fine. So we're kind of a shrinking economy. So why we have to assume demand is stable and supply is only shrinking, right? So it's a big issue. But again, labor reform is one of a very important,
Yes, follow up, please.
Labor reform, what do you mean concretely? When you say you want more mobility on the labor market, what does it mean for the policies? What does it mean as concrete steps that the government should do?
Let's make Japanese banks like Credit Suisse. That's it.
Like Credit Suisse.
Yeah. You have the answer, right?
What does that mean?
We can fire. We can fire people.
Let's hope you don't, yeah? Okay, you got a question? Yes.
Ask Trump to come to Japan.
Siegfried Little, Austrian newspaper, Der Standard. A question about inflation rate. The BOJ says the underlying trend is the trend is okay, still going to a direction of 2%. They say now. I think in the last month there was the energy prices was the main reason for not showing the trend of upward trend, but products, a lot of products got more expensive in the last months because of higher wages. So, how do you see this point?
Yeah, I think my current understanding is that Bank Japan does not want to move in the near future because of the cost of the import inflation has become more visible. So the BOJ is now saying that 2% inflation is achievable, But this is mainly because they do not want to move and devalue the yen, maybe. But I think the actual inflation trend is not improving much. Well, if I take a look at CPI excluding food and energy, for example, which is right now 0.8%. Wow, it is very high. However, yen devaluation impacts on core inflation like CPI excluding food and energy is also very, very high. Impact is very strong, actually. Look at, for example, Uniqlo, for example. They're producing products in China, for example, but their prices should go up because of yen devaluation. And also, if I take a look at the hotel accommodation, for example, last month up 10%, month over month. Why? Because of the lagged impact from the depreciation of the currency. So if they do forget about the currency, I think the even core inflation is much, much lower. But the point is, the people do hate inflation. I also hate inflation somewhat. Apart from the issue of the fiscal sustainability, they have to explain to the people that because we need to do some inflation, because that may help probably in the future in terms of the fiscal sustainability, and that will be probably the limiting your tax bill from increasing. Other than that, I do hate food price rising too much, in my view. I think it's kind of ridiculous. If you go to family restaurants, for example, they sell the same thing, much smaller portion. Hamburger steak is not 1/3, but 2/3, for example. I don't accept that. But this is the import inflation. What the BOJ has done is to just inflate food prices. So BOJ now recognizes that we might have done a wrong thing. Why not we do change the course? That's why they're saying 2% is achievable. But nobody believes 2% is achievable. And Motani-san is the expert of the deflation. Yeah? You wrote a book a few years ago about deflation no shoutai. So I think the...
Okay, I have a quick question from our demographic expert here. In his speech on Thursday, one of Abe's new targets was this 1.8 fertility rate, so 1.8 babies per woman, up from about 1.4 for now. He also had a target of maintaining the population at around 100 million. To me, the maths doesn't add up. If you have 1.8 child per woman, that's not going to keep the population stable.
That's right.
So how realistic is Abe's goal here? And that's my first question. And this begs a second question. Does this mean that Abe is going to look into immigration in some way to maintain this active population of 100 million, as he calls it? And just wanted to hear your basic views on what Abe should be doing in terms of immigration, in terms of demographics and the overall economy.
Thank you for asking me. I'm really realizing that I failed to impress you. That you're going to ask some question to me, but it's my fault. Okay, talking about Abe's cabinet, I think there are three opinions in there. Firstly, Prime Minister Abe himself and also the core part of his brains believe that demography has nothing to do with the economy. That's those people who believe in the first arrow. I mean, maybe some of you or many of you also believe the same. Or if you do the proper monetary policy, then you can cope with the decreasing population. That's why first three arrow did not contain anything about demography. But the first group. So Abe maybe still the same. If he doesn't believe that, he could not say it's we're going to have a 600 million trillion GDP in the future. That is only achievable, or if you believe, if you can think it's achievable if only you think demography has nothing to do with the economy. Or the second group is maybe thinking about they're not a professional. They don't really have never thought about demography so much, even though they know demography has an impact on the economy. So that's why they are saying some kind of imaginary things. The third group knows the reality, and they just keep it, try to be silent unless he resigns. Okay, and I want to show you this. So maybe this is the world demography. Okay, it's not a total population thing. Okay, total population is the sum of each age group. Okay, and in Japan, it's about this. Okay, our largest age group, those who were born right after the war, is now going over 65 years old. The second large group of their kids, children, now going over 40. Okay, and we so far has decreased the new number of the baby. We made it half compared to 40 years ago. This is already happened. This is what already we did. So that means this baby will become older, then all those parts above this line will disappear. That makes Japan's population maximum 70 million. Okay, it's not 100 million. 70 million is the maximum, because those people, when those people grow like this, if only we don't see any decrease of the future baby. If we achieve the fertility rate of 2.1, we'll see the flat number of baby, then we'll see the real decrease of the population.
Right.
And if we fail to keep it, or just we succeed to make it 1.8, we'll still see decrease in number of the babies. Anyway, we're going to have, in the 50 years ago, later, our Japanese population is about half or 60% of current population. And it will be the same size as the current UK and France. And it's a reality. So you cannot change the course, because we already made number of the baby half in past 40 years. So there's no way to change this. And some people argue you can rely on our migration. No. Migration, I welcome, but it does not work. Almost nothing. See China, okay? See China. You have to see China. 40 years ago and now, you see very similar shift to Japan. And later, it will become like this. It's a United Nations projection. I have to tell you, they don't think single child policy will continue. I mean, they expect the future baby flat. That means China will adopt double children policy. Okay, you may understand that? They will abandon single child policy. It's their United Nations assumptions that. Then China will see the stable number of babies. Still, they will see a huge decline in working age population, because those who had 2 or 3 or 4 brothers will become aged and finally die. Okay, so Chinese population will decrease very rapidly. That means all the migration power, excessive human power, will eventually go into China. Currently, the country currently is not having any foreign labor so far, but they will have it, because there's huge number of the Chinese origin people living outside. One more thing, Singapore. Okay, Singapore. You have to see the Singapore, because it's the country welcoming foreigners. And I didn't mention, but all those United Nations figure includes foreign residents. Okay, I have to repeat again. Okay, it includes Japan, China, Singapore. Those figure includes foreign residents. Without permanent visa, they include it, okay? So Singapore has been welcoming foreigners to come, so that's why their working age population has been growing so fast. But that ends in real huge growth of aged people. And also Singapore has a very low fertility rate. So those who come to Singapore will not have so many babies. That means they still will have less young working age population, while they have maybe 4 times more senior population in next 25 years. This is the consequence of the migration policy, and you don't argue about it so much. But reality is that more migration you will have more seniors. And you have huge more instability in the future. So don't trust those people who just argued our aging ratio other than real absolute value of each generation. You understand that?
Okay, thank you. Anthony had a question?
Well, he's answered my question really, but,
Okay.
does go to a two-child policy, possibly even encourages parents to have even more children, you're saying in effect that will have a marginal impact on the working age population and on the how long. In other words, how long will it take if China does go to a higher level of breeding? How long will that take before it has an impact on the Chinese population?
Is my question for me?
Yes, for you, yes, on the China population.
Well, demographic change is so slow. So China, actually, single child policy has not been working so much. So they argue that Chinese people now have only one kid. Maybe those your friends, of Chinese friends living in Shanghai, maybe may have only one kid. When thinking about total China, most of them, majority, huge majority actually are just farmers, and they indeed have two or more babies actually. So I'm showing just the United Nations estimate, okay? I'm not the United Nations person, but they estimate actually their number of kids has not been decreasing so much. That means single child policy did not work. In average, they have two kids. So abandoning that policy will not change the course so much. I mean, they already have two kids. They will have two kids. But the reality is that the Chinese economy has been supported by those generation who has, in average, 3 or 4 brothers and sisters. You understand that? So they were born during the age of Mao age. So they already have so in average, they have 4 or 5 sisters and brothers, and they are now supporting the economy, and they will go out. That means even abandoning single child policy right now, and from next year, everybody will have 2 kids, then still China will not get away from the negative impact of the demography.
Thank you. Tom, you had a question? Yeah. And then we'll come to you, sir.
Thank you, Andy. My question is maybe similar to what Judah asked as well. I wanted to ask just about
affiliation.
Mathios Energy. Thomas Sullivan's my name. I wanted to ask you about the 2 numbers that the Prime Minister mentioned last week. He mentioned an increase in GDP of 100 trillion yen. And as Andy mentioned, he also mentioned a population number of 100 million. So this would seem to imply that, productivity increases would have to be, per capita productivity increases would have to be 50% plus. So this, again, doesn't appear to make sense. And I was just wondering if I could have your opinions on both of you, maybe on those 2 numbers.
Yeah, I have some views on the first, I think, the number, which is from 500 to 600 for nominal GDP. First of all, Prime Minister Abe did not mention about the target year. He said only 600 trillion yen. In 5 years or 10 years or 100 years or what? I don't know. But there is a sort of consensus in the market that maybe by 2020. But if it's 2020, almost zero chance. In my calculation, if the target year is 2020, nominal GDP has to grow every year by, roughly speaking, 3.4%.
3.4.
And well, again, I have to talk about the target of inflation rates. But if GDP deficit grows, roughly speaking, by 1.5% maximum. If the CPI is 2%, I think GDP deficit maybe 1.5 or 1.4%. So it means real GDP trend has to be 2%. And that means we have to have a huge improvement in labor productivity. So it's zero chance. So it is not controversial at all. This is the just unrealistic target. That's it, done. So and again, I don't know why this number. I don't know from where this number really comes, but this relates to the fiscal simulation. The Cabinet Office, every year does a medium-term fiscal sustainability analysis. And in that, their assumption is 3% annual GDP growth rate. So in my understanding, the reason why 600 comes out is because the cabinet office tells the prime minister that we need 600 trillion yen by 20 to achieve primary balance, deficit to disappear. But I don't think it's really the realistic number. And maybe for the the population, I don't have any people.
Yes, I'm very afraid of Japan is becoming more and more like China or North Korea, or saying alert, or the government. We start not distrust the government more, and that's my fear. One good thing about Japan, that fear, nobody is talking about that so far. So it's like everybody was trying to forget about the 600 trillion yen. I don't hear any argument about that afterwards. And only stock price is going down gradually. It's kind of, maybe I don't think we're going to argue it anymore because it's ridiculous. And talking about 100 million, keeping up a 100 million population in Japan. You see this is the Japan forecasted at 45 years later. Now, 45 years later, the majority of the society is over 85 years old, okay? If you want to achieve that 100 million number, okay, let those people over 85 years old, let them survive more than maybe 10 years more to using any medical measures. And they spend huge amount of money to have them alive, then maybe we'll achieve 85 million. So that number came out from those maybe economists, not those who are studying demography. But the same fears about cabinet office. Okay, our projection is coming from our National Research Institute of our Social Welfare and the Population Laboratory. That is a quasi-government institution in Japan. And so far, their projection has been very correct, not political, very objective. And because we criticize a lot about their projection, it's so too politic. Then they change the course to make it more objective with no interference from the government. But I think 100 million people in Japan, that kind of thing, is that showing that this research institute, National Research Institute, has becoming more political rather than objective. That's another sign of Japan is becoming more like China. So it's a very dangerous sign. Okay, so let's not talk about that figure because it's irrational. But also China. Okay, let's not talk about China. It's becoming the largest economy in the world, and it's ruling the world. It's irrational. Demographically, it's impossible. Let's not talk about Singapore. Actually, I used to be living in Singapore. I like the country very much. But let's not talk. The Singapore will be also most growing society in the world. No, it's impossible with this demography. So if you just study a little bit about demography using just the United Nations figure, you'll learn more about the world. And also United States. If you just talk about United States, I don't know, somehow you know about United States. You think it's growing, but you don't think it will grow so fast. Yes. Okay. United Nations foresees same level of the coming baby for forever. It's very, fertility rate is very high, but United Nations, or you can also foresee huge increase in senior populations because, now you have twice more young generation compared to seniors. That means you will have twice more seniors in near future. Yes. So United States will face a lot more seriously to our medical and social welfare problem. And Obama has been very wise to try to cope with it. But politically, it's impossible for the United States to really do something right against this. So also, the United States will see real problem demographically in the future. Not future, currently.
Okay, question from this gentleman in here, please.
Makoto Honjo Associate. I have two questions. One for Mr. Shirakawa. And you have said that fiscal stimulus does not work. And there are economists like Richard Koo, who says that fiscal stimulus actually has worked for Japan by keeping the economy, the real economy, moving at slightly above 0%. And it has worked for China when the Lehman shock sort of came about, and China sort of stimulated the economy very massively, and therefore it was able to avert the effects of the Lehman shock. And if you could give your comments on that position, I would appreciate. And for Mr. Motani, your projection that the economy is sort of shrinking in the long term. There are people in Japan who think that we should give up the mantra of economic growth and figure out a way to live with a smaller economy with or a shrinking economy, and try to figure out a way to live under those circumstances, like in the Edo era, the latter part of the Edo era. And if you could manage to, if you could make your comments on that kind of thinking, I would appreciate very much. Thank you.
Yeah, well, after the burst of the bubble, since the burst of the bubble, Japan has introduced, the many times of the fiscal stimulus, public investment. But I think the public investment, was not so effective in pushing up the potential GDP. It depends on how you do, and the fiscal stimulus actually includes some tax cuts, and so not only public investment. But I tend to think that the public investment itself may have the multiplier of maybe 1 or 1.1, but the problem is that because of the fiscal stimulus does not have any long-lasting impact on trend GDP growth rate. Outcome is the continuous accumulation of public debt and rising debt to GDP. And I think I put more importance to the psychological impact of the debt to GDP increases, because there is a clear I think the correlation between the corporate debt to GDP and public debt to GDP. If governments borrow more, companies borrow less. This is mainly because the more debt printed by the government means higher chances in the future of the more tax increases. So private sector's debt would continue to go down. So then the question is, even though I say multiplier of public investment is larger than 1, is that higher than the corporate investment multiplier? No. So from that sense, I think the fiscal stimulus does not work. Of course, in the very short run, both monetary and fiscal stimulus may help to stop the disastrous deflationary spiral, after the Great depression and so on. But we are not in such a kind of situation. We are suffering not the short run shortage of demand. What we suffer is the more long term, I think, the trend growth and so on. And China may face the same issue, in my understanding, because of demographics does matter. And I think automatic impact on the fiscal balance is on the upside, mainly because of the social security. It depends on their system. So I think the worst thing they can do is to stimulate the economy by public investment. But of course, the other trend, more security, social security expenditure, debt to GDP growing, and corporate sector now starts to try to reduce the debt because of the non-performing loan problem. So it should exacerbate, because the more borrowing from the government means less and less borrowing by the private sector, and there should be a significant downshift of the Chinese economic growth rate. I actually have the very interesting chart if you're interested in. I think the China and Japan's trend GDP growth rate, if you compare, I tend to think that China's GDP growth rate may be going down to very close to 2%, maybe in 2030. Yeah.
2%.
Well, I want to ask you this question quickly. Okay. Obviously, we have been in a great shift of Japanese economy, not only Japan, actually China. I didn't mention, but Korea, Taiwan, same. Singapore and Indonesia in the near future, we'll see the downshift of the economy, but it's not returning to the Edo period, of course. If it returns to the Edo period, most of you will have to leave Japan, and Credit Suisse will disappear, but that will not happen. Okay, you see, as I show you our GDP, okay, it was growing so fast. And even though so-called bubble bursting out, okay, stock price went down so fast after a bubble bursting out, actually our GDP was growing. Nobody talked about this, but reality was that. And it was at the top when our number of the labor workforce was at the top. And when they become so flat, we had some structural or adjustment, but basically you can say it's flat. And China emerged to take some of our export, okay? Then our GDP decreased a little bit more, but still it's stable. That means we shifted from growing to stable, like your height, okay? You grew fast when you were a kid. Now maybe your height is same. You're not shrinking, right? So I don't use the word shrink. It's flat. Even though our stock price goes down, then our economy is very stable. And those who know the Lehman shock, okay, Japan was among the most stable country against that shock. Actually, inside Japan, we felt no change. It's very stable. Why? Because our population decreases very gradual. Then if you can just gradually, very gradually, 1%, okay, 1% every year, if we can just increase the productivity, just 1%, we can make it flat. We can achieve zero growth. In reality, maybe we're achieving 2% increase of productivity, okay? Then that's why we've been enjoying 1% very slow growth of GDP, even though under shrinking demography. So what I say is Japan is doing so well compared to your country in the future. Okay, I'll predict. All the original country, will see the same thing in next 50 years at most. Then you'll have real problem. Then you will not do as well as we did. China will not do that as well as we did. Okay, our demography, our working age population has already shrinked 10 million, but still we are keeping the same level of GDP because our per capita GDP has grown a little bit because of the increase of productivity. And he says we need more reform, of course, but we've been doing a little bit of reform in some companies. That's why our labor productivity is increasing a little bit more. That means we're doing very well. And we have to do that. We continue to do that. 1% increase of productivity every year, then finally we'll see the end of the decrease of kids in the future. Why do I say so? Okay, our fertility rate in Tokyo is very low, 1.2, but in many local communities, actually fertility rate is now growing a little bit. I know one small village near Hiroshima. Majority of the people there living there is more over 85 years old. But now they have the inflow of young people, and their fertility rate is 2.67. I know revival is coming from the edge of the economy. Yes, that's why I'm discussing. We have to move young people to the countryside. I'm not saying let's return to Edo period. We have to become like Suisse, okay? Let the rural end of the country like a Talmud prosper more than rural center. That's the Swiss strategy. And we can take that because our population will decrease. It will become more easier for us. And I see the future of Japan, it's not so gray as you observe. Actually, you should focus more on Japan rather than other growing companies.
What's the name of that village?
Oh, there are a lot of, but are okay. The one that I mentioned is all none. Few Japanese know the name because new name after the merge of the several villages.
Okay, thank you. Okay, this is the last question. I'm going to research that.
It's very interesting.
Thank you very much. I guess my question is a very simple one. When do you expect X day? In 2012, there were two kinds of hedge funds in New York. One said, let's play the Kuroda bet and play short the yen and buy the Nikkei. That trade ended in August of 2015. The other group of hedge funds in New York said, no, let's not do this because Japan is doomed. They cannot at some point pay the fiscal deficit because of the shrinking population and the fact there's no inflation to reduce the debt. So when do you expect X day to come? 2027?
Nice question.
Wow.
Yeah, well, several different, I think, the indicators we have to look at or kind of thresholds. We actually look at the debt service to tax revenue. And tax revenue this year is like 50 trillion yen. And the debt service is, roughly speaking, 20 to 23 trillion yen. And when the tax revenue goes below debt service, you're going to have this serious problem. I think the one-to-one relationship, but our current simulation is that for the coming 10 years should be okay. Should be okay means nothing really disastrous happens, like include natural disaster. That 50 trillion yen of tax revenue may be kind of flattish if they can raise VAT again, and that 20 to 23 trillion yen could go up to maybe 40 trillion yen in, let's say, 15 years time, depending on the interest rates. So for this dynamics, what is the most important thing is the market interest rates. So this is a kind of egg and chicken, right? So egg and chicken means if the markets believe, wow, Japan will suffer a huge problem on the fiscal, then interest rates start to go up. This is a self-fulfilling process. So if the interest goes up, that would make the X day closer. So the one headache of us is the Bank of Japan now buys, roughly speaking, 95% of the government debt. And how sustainable is that policy? So one assumption is that nothing really happens in the inflation. So I tend to think that Bank of Japan does not want 2% is achieved. If 2% is really achieved, real big problem for them because they have to start taper.
Yeah.
Disaster, possibly, right? So they are crossing their fingers. Please do not. Please, inflation shouldn't, touch 2%.
Well, I want to add one more thing. Okay, we expect, the government expecting this. Okay, we have huge saving. Our personal saving is so huge, and no concrete figure. Maybe they say more than half of that personal saving is owned by those seniors. Okay, they will die. And thanks to our very low fertility rate, okay, in Japan, 4 seniors have 2 kids and one grandchild. You understand that? So, while we've been supporting our economy somehow like North Korea, I don't know why so it's durable, but anyway, in 50 years later, huge amount of the personal saving will go into government because there's no inheriting people. Many people have no grandchildren. I'm not joking. Yes, and we expect to have maybe several 100 trillion yen coming back to the government because they failed to use up the money. And if they just notice about that, and when they try to use up their saving before they die, it's very good to economy. So it's very different from Greece or United States. Our government debt is basically financed by those seniors' savings, and they have nothing to do with money. They don't use it. they just leave it, then finally they will not fail to let their descendants to succeed those, because they don't have any descendants. So some part of the government debt, maybe 1/3, I'm not sure, somebody can just calculate, maybe I accept 1/3 will disappear because of that. That's more effective than inflation, I think.
Okay, it's 2 o'clock. We'll have to wrap this up. Could you give a warm round of applause, please, for Motani-san and Shirakawa-san? Very informative speeches. And just a token of our gratitude, a year's complimentary membership for the club, so you can come and
Thank you.
explain your theories over a glass of beer.
To make more enemies.
Okay, thank you very much. Thanks for coming.